was another tough day for tech, the Nasdaq dropping 1.3% for its second straight day of declines. Our next guest says, get ready for more tech pain ahead because the highs could be in for the year. Julian Emanuel is BTIG's chief equity and derivatives strategist. Julian, great to see you.
Great to be with you.
I feel like the intro sets you up to be the Grinch because we were all expecting seasonally some sort of rally into year end, Santa Claus to come, with his sleigh, et cetera. And yet here you are, highs are in. It's over.
Well, it's not over.
Okay.
In fact, we actually think that 2021 is setting up to be a very good year. But when you look at 2020, the seasonals haven't really worked that well. In fact, you saw massive rally, massive volatility, and huge volume during the summer months when you don't traditionally see it. And when we look out over between now and year end, between now and Inauguration Day, there's a lot of uncertainty with regard to politics. There's, again, the same uncertainties that we were dealing with before the election. Will there or won't there be stimulus with the virus accelerating? And all of those are headwinds, particularly with rates starting to creep higher, which are punitive for the Nasdaq. And look, when you look at Monday's action, spike highs on very heavy volume, I think it's very noticeable that all the major indices made new highs except 2020's leader, the Nasdaq. That's a sign of weakness in our view.
Yeah, definitely. But it's important to note that even though you think that the markets overall, the broader markets could be held back because of the heavy tech weighting, that there are opportunities in this value rotation that you still see. So which sectors do you like the best there?
Absolutely. For the long term, we think, again, the story of a bullish 2021 will be written by financials, small caps. We think healthcare in particular, has really suffered coming into the election, trading at over a 5 multiple discount to the S&P 500 versus an historical average of a 1.5 multiple premium. And what we're seeing is, again, with President-elect Biden talking about, making tweaks to Obamacare, not really, sort of ripping it up. And we're getting body language from the Supreme Court that they're not likely to strike down the ACA either. We think there's a lot of opportunity in healthcare.
Hey, Julian, it's Tim. As a derivatives guy, you see the type of volatility in markets. So we're halfway through our sixth 10% move since August 5th. Up 10%, down 10%, up 10%, and so on, and now down another 6% of the 10. What does that tell you about this market? Because ultimately, this is extraordinary in historic terms.
There's no question about it. And again, we all know, having lived through it, whether investors or not, that 2020 has been an extraordinarily historic year. And when you look at the next several weeks, the message is that this level of volatility is to be expected. And frankly, when you think about the average price of the VIX, it's hovered between 25 and 30 for the most part, most of the year. And you're right in pointing out that volatility usually does come in during the most wonderful time of the year. But again, there's enough uncertainty where we think that's not the case.
Julian, great to see you. Thanks for your time.
Thank you.
Julian Emanuel, BTIG. I feel like we need a countdown to Christmas clock. That would be really appropriate here. Guy yesterday said that it looked like maybe a top. Julian is saying the same thing. Pete, where do you stand on that?
Mel, I know I hear that a lot, and everybody's talking about that, but I think when you consider all the different various catalysts that still exist out there, I mean, we still are dealing with the election. I think there's a lot of catalysts that actually could still send us higher. Now, yesterday we traded 48 million option contracts, which was a monster number. We talk about the volatility. Just a week ago, we were trading at 37. Now we're trading 25. I don't think we stay here that long, Mel. I don't think we just sit here and adjust. I think we're going to see some more volatility coming back into the marketplace, but not necessarily in a negative way. I just think that we're going to continue to see some of what you guys are talking about when you're talking about rotation. But I do think there's a huge difference between growth names and specifically quality names. And I think there are quality names out there that separate themselves away from some of those growth names that we all talk about, whether that's a Zoom or a Peloton or whatever it might be. And I think there are definitely the quality names out there that have pulled back a little bit, understandably so, after the huge run that they've had, that I think actually gives us a little bit of upside.
And we're going to talk about these quality names. We've got a massive, huge game ahead. But I do want to go to Guy just quickly and say, are we going to look back and say that Monday was in fact the top? Now that you've had 24 hours to think about it, Guy.
The S&P 500, I mean, for you armchair technicians, and I know Carter Braxton Worth is watching right now, and of course the great Louise Yamada is also tuned in. But, you know, people can talk about the potential for an island reversal. It still sets up that way in the S&P 500, given that gap open higher and the potential for a gap open lower. So, yes, that's one of those pages in the book, and we did this Moby Dick thing months ago that you want to sort of put a little check mark on, or what do you put, those little tabs? You were one of those students I know that highlighted like every single phrase in every single book. Made me crazy, but
I like to respect the book.
Just saying.
Shepard Smith here. Thanks for watching CNBC on YouTube.